pair you two together because of a modest hawk-dove debate. Stephen, you are the most hawkish economist that I've read on the street. You've since pared that back. You were thinking that we could even hear of a balance sheet unwind as soon as today's meeting. Was it the data or was it the Fed that make you pair it?
It was the data. I mean, I think the reason for moving on the balance sheet in July was if you wanted to keep the rate hike option open for September. And I think that was something that, in my mind, was still at least worth keeping open until the last set of inflation data, which pretty much took that off the table.
But then what's your forecast then for next year? Because the market's just looking about one hike right now.
Well, I think inflation is going to get back on track. I agree with Chair Yellen and others at the Fed that a good part of the slowdown that we've seen is transitory. The economy's fine. The labor market is as strong as ever. And I think we will eventually get back to a gradual upward trend in inflation. So I think we're going to get back to the gradual pace of rate increases. I mean, I think it's going to look very similar to 2017, probably 3, maybe even 4 rate hikes next year.
Ian, and you disagree because you made the point, A, December is not necessarily in the cards. B, a new Fed chair in 2018 is going to want to hold back on rates. Walk me through your scenario. Go ahead. Come on, guys. No, I'm kidding.
Well, I do think that the market is telling the Fed that they might be risking a policy mistake at this moment. And if the Fed's risking a policy mistake, we would expect to see the 5s, 30s curve flatten a bit. And that's what we've been seeing. The data isn't necessarily going to rebound immediately and look constructive at the end of the year. We're going into an important period in D.C. where we have the budget debate, the debt ceiling, and a potential government shutdown. If the government shuts down, there'll be some data distortions that occur, and the Fed might effectively be flying blind into the December meeting with data that's difficult to interpret, and that'll make it harder for them to hike. And then any incoming head of the Fed is going to want to give rollover taper a bit of time to take hold and to see how that's going to impact the real economy. And I expect you'll see more of a wait-and-see attitude at the beginning of the year, even if it is Yellen.